Hi friends, the good news is that in this video I am going to present to you 3 Indian AI stocks that are very small right now but have the potential to go really big in the coming years. But the bad news is that none of these companies are pure play AI companies, and for that matter right now in India there are no listed pure play AI companies. What I mean by pure play AI company is, have a look at my screen and you will see C3.ai. It's a US based software company, and if you look at the services they provide, they do AI applications, they produce AI platforms, they do AI product suites, and they also work in data science space using AI capabilities. Every single dollar this company earns is using the AI capabilities. This is what I call the pure play AI companies. Right now in India there are no listed companies. There are startups out there, but there are no listed pure play AI companies. Secondly, out of these 3 companies that I am going to present to you, I listened to the investor presentations for these 2 stocks that I am going to share with you. You won't find that information anywhere on their websites or even in their annual reports. So that information is absolutely important for you to make decisions whether you want to invest in these companies or not. Thirdly, I've been working in IT companies for more than 16 plus years, so I know a thing or two about AI. So a humble request, please do not skip this video. Watch this video without skipping. You will get the maximum value out of it. With that, let's get this video started. The first company that we are going to analyze is Intellect Design Arena Limited. Have a look at on my screen and you will see that this company is mainly in the corporate banking sector. They are totally in banking sector and they have created a niche for themselves. Second point, if you see that towards the right, you will see the AI products there that they have already developed few AI products. Actually on their website, you only see 3 AI products. But when I listened to their investor presentation call, that was actually 2 hours call, and I will provide you the link. It's a YouTube video. Go ahead and watch that video. You will learn a lot about their business. But let me quickly summarize their AI capabilities. So they have created a business unit called Intellect AI that deals with the AI capabilities. And their one of the product is in the insurance sector. And what they're saying is that Intellect AI is the only insurtech that provides AI solutions across the whole underwriting value chain. This is extremely important. People who understands insurance sector, they will know that underwriting and insurance is absolutely the core of their business, and these guys seem to be providing that AI technology, and to me it seems like a business moat that they have created for themselves. Secondly, they also have a second product which is in the wealth management area, which is called wealthforce.ai. This product they have developed already and they are ready to sell this product in the market. The only thing they need to do is have the rigor in their sales process so that they can start to get more and more clients in the area of wealth management. Thirdly, if you see that they also have developed another AI product called IESG, which is environment social governance, extremely important area within the banking sector for the compliance reasons, and they seem to have a AI product in that particular area. Fourth one that you will see here is the Magic Invoice, which is around account payable, and they have developed a fully AI solution in that particular area as well. So all in all, if I were to pick one company out of the 3 from a deepest AI technology perspective, I would say that Intellect Design Arena Limited right now has developed strong AI capabilities, and in the coming years, if they're able to sell this into the banking sector, this company is going to rock and roll. Having said that, let's have a look at the fundamentals of this company. What you see on my screen is the price of their stock in the last 5 years and how it has moved. Pre-COVID, it was at around 200 average level, and now it has gone to roughly 640 levels. And you can see a lot of volatility in this stock because it's a small company. It's a small cap company of roughly 8,000 crore capitalization. If you look at the last 1 year, the stock has given negative 4.49% returns. And let us now have a look at their financial data as well. Let us go ahead and have a look at the revenues. So in the last few years, if you look at the revenues, they have been constantly going up from 1100,000 crores to 1500 crores to 1385. There's a dip here in the COVID year. But after that, if you look at it, the revenues have been constantly growing up, 1500 crores, 1900 crore and 2200 crores roughly in the last fiscal year. If you look at the EBITDA, again, it is growing at an extremely healthy rate. For an IT company, if I look at 2022, it looks like to me that they have done a EBITDA of roughly close to 24%, which is extremely good. 2023, the EBITDA has dropped slightly by roughly it is around 21%. So again, not a great deal of margin improvement. So from that perspective, it is looking weak in the year of 2023. Potentially one of the reasons that the stock prices have fallen down in the last 1 year. If you look at the other fundamentals of the company, earning per shares in the last 3 years on an average roughly 22, I would say. Again, 2023 has not been a great year for this company. If you go back and have a look at other factors such as ROCE, return on capital employed, looking good, 18%, return on equity 13%, that is slightly on the lower side. And if we have a look at their shareholding pattern, let's go down and have a look at the shareholding pattern, quite important in cases of small cap companies. Have a look here and we will see that from a promoter's perspective, they only hold 30%. From a small cap company perspective, that is a negative point, because if a promoter is having 60%, 65% returns, it gives us more confidence about that small cap company. And even if you look at the distribution here, you will see that Rahul Jain, who is their CEO and MD of this company, holds roughly 5.5% of their shares, and actually it has gone down. Again, not a great sign from that perspective. But if you look at the FIIs and DIIs, there is good position that FIIs have taken, which gives a lot of confidence about this company. In fact, from a DII's perspective, also roughly 5%, that has slightly gone down, not a good sign again. But overall, from a public perspective, 40% of their shareholding is with the public. So that is all from a shareholding perspective. If we go back and have a look at their other fundamental ratios, such as, let's have a look at the cash flows. Cash flows has been positive in the last few years, except year 2023, that is negative right now. Seems like they have done some investment here to the tune of minus 177 crore, that is causing negative cash flow. So again, the company might be investing in the new technologies. We don't really know from this data here. Let us also quickly have a look at their borrowings and their debt position. So if you look at the borrowings, it is only 27 crores. Almost looks like to me a debt-free company, and the reserves are quite high. That is a very, very positive point. And if you go back and have a look at their PE ratio, let's go ahead and have a look at their valuation side of the things. So last 5 years, you see the PE chart here. Their median PE is at roughly 28. Right now, their PE is looking at that median price. From comparing its past performance perspective, the share is trading at the median PE, which is not overvalued or undervalued. But let's have a look at the valuation of this company. How much should we buy this company at? So if I go back to their financial results and have a look at their earning per share, so roughly 22 is the average earning per share in the last 3 years. So if I take an average of 19.81, 26.10, 19.77, we will come to roughly 22. And if I have a look at Nifty ITPE, that is right now at around 25. So let us go ahead and multiply 25 by 22. So let us bring the calculator here and let us multiply 25 by 22 here. So let us go ahead and do that right in front of you. So the share price might be at around 550, but right now it is trading at roughly, if we go back and have a look at their current price, we see it is right now trading at 640. Seems to me slightly overvalued right now, but fundamentally the company is looking good right now, and they have shown AI capabilities. The company seem to have the business mode. My suggestion in this case will be that wait for the stock to get corrected. Let it come down to levels of 540, 530. Maybe that time it presents some opportunity to take some positions. Again, not a financial advice. I do not hold this stock. I've done the analysis in front of you. Please do not take this as a recommendation. Do your own due diligence and research before you take any positions in this company. So far, if you're finding this video useful, hit the like button, share it with your friends so that maximum people can learn about stock investing. The second company that I want to present to you is a company called Calton Tech Solutions Limited. Have a look at my screen, and if you go to their website, we will see that this company is operating in cloud engineering, blockchain, and data engineering and AI. I was listening to their investors call on YouTube, and it was around 55 minutes of video. And what they were saying is that right now they do not have any active AI clients or customers, but they're in talks with their 2 or 3 customers right now, presenting them their AI capabilities. Therefore, we need to keep this in mind that this company right now do not have active AI clients, but they are working on onboarding few clients on the AI technology. Let us go ahead and have a look at the company's performance as well. In the last 5 years, if we see, the share prices have gone up by 84%. Not very impressive if you ask me. If you look at the last 1 year, the company share price has gone up by almost 16%. And if you look at the last 1 month, the share prices have gone up by almost 41%. Let us have a look at their financial numbers as well. Let us have a look at their revenues. So if you look at their revenues in the last 3 to 4 years, their revenues have gone up. So in the COVID year, it was around 774 crores. It has gone up to 843 crores and up to 919 crores, which is good. From a EBITDA margin perspective, if you look at the data in 2023, they actually are showing a loss of 88 crores. Now, most retail investors wouldn't care to understand why the company who has made revenues of 919 crores is showing a loss here. What I did was I had a look at their P&L statement. So have a look here and you will see that their revenues are here listed here and their total expenses are less than their revenues. So they actually made an operational profit of roughly 69 crore rupees. But if you look at their exceptional items here, they seem to have exceptional items here roughly 184 crore rupees, and they have given the description of this as well. So if you go down and have a look here, you will see that this is a write-off because of goodwill derecognition. Basically, Calton Technology has acquired few brands in the last few months, and those brands were carrying a goodwill value in their books. What Calton Technology has done is they have got rid of that brand value because they are coming up with this one Calton brand, and therefore they have, from a books perspective, cleaned up that goodwill value that they were carrying. Simply because of this, they have got negative profits in their books. Otherwise, the company has made profits. If you go back here, none of these numbers will make any sense right now because of the write-off the company has done. Again, when I was listening to their 55 minutes investors call, this point was mentioned by their CEO and MD. And again, that brings a lot of clarity to investors like us. The reason I'm sharing this with you is that please just do not look at the numbers, go into details of the numbers, and you will know a lot about the company. With that, now let us move to some other important factors about this company. So if we go back and have a look at this company's shareholding pattern, so let us go down here and have a look at shareholding pattern. So the promoter's stake is roughly 58% back in 2020. It has gone down to roughly 52%. Again, not a good sign from that perspective. Have a look at their promoters. So if you look at the promoters, they've got a bunch of wealth management companies here, as well as Chintam Krishna Reddy, who is the CEO and MD of this company, along with the Chintam family seems to be holding the stocks. Their shares have not gone down, but if you look at from an institution's perspective, the shareholding from here, for example, Matnick Finvest LIP, 44% to 42% have gone down. From FIIs and DIIs perspective, FIIs have not invested heavily in this company, and DIIs also have not taken any strong positions in this company. This is not a great sign if you ask me, because if FIIs and DIIs have invested in a company, that gives you a lot of confidence. But public, from a retail perspective, seems to be going crazy about this company. From 40% in 2020, it has gone up to roughly 47%. If you look at the company's other important parameters, such as, let us go ahead and have a look at their borrowings and debt position. If you look at the borrowings here, they've got 148 crores rupees of borrowing, but the reserves are higher than the borrowing. So from that perspective, I feel comfortable. And again, let us go back and have a look at their PE ratio now from a valuation perspective. So if you look at the last 5 years PE ratio, the median PE is roughly 6.9. Right now, the PE that it is trading at is 18. So from its own tracking perspective, it seems to be tracking at a higher price right now. If you go back and try to value this company very quickly, have a look at their earnings per share. I'm going to not count this number here because of the reason I just explained. So if you look at the earning per share in the last 3 years, roughly at around 7. And if we take a PE of 10, then 70 rupees might be a fair value of this share price from my perspective. But if you look at it right now, it is trading at 86. From that perspective, seems to me slightly overvalued right now. But hopefully, if the share prices go down, you might want to consider and take some positions. Again, not a stock advice here. All I am doing is presenting you unbiased facts and data for you to make your own decisions. So far, if you're finding this video useful, hit the like button, share it with your friends so that maximum people can learn about stock investing. With that, let us move to company number 3, which is FL India Limited. Have a look at my screen and you will see that this company is mainly into consumer marketing and advertisement segment. And if you look at this company, you will notice that in the last few years, let us go ahead and have a look at from 2014 onwards, the company has been acquiring a lot of small companies. So for example, Mass is now a FL company, Traction, FAS, Bizuri, Chauffeur, Revex, Vizuri again, AppNext, Jamp, for example, UAPI has been their latest addition into their kitty. And if you look at the UAPI, you will see that UFI is one of the company that is using AI and ML powered technology in the advertisement sector. So from that perspective, I see that this company is starting to look at the AI capabilities in the marketing and advertisement sector. Now, if you look at the company's performance in the last few years, in the last 5 years, if you look at it, the company has stock price have gone up by almost 521%, which is again extremely impressive. It's a small cap company with a market cap of 1400 crores roughly. And if you look at their financial numbers, let's go down and have a look at it. You will see that in the last few years, almost their revenues have been doubling up. So 558 crores here, 1153 crores, 1488 crores, which is extremely impressive from a revenue growth perspective. Their EBITDA margin has been going up constantly. From an earning per share perspective, again, an extremely impressive growth that they have shown. From a fundamentals perspective, this company is looking extremely good. Let's also have a look at the other important information such as shareholding pattern. So let's go down and have a look at shareholding pattern, and you will see that from a promoter's perspective, they were holding roughly 68% stake in the company back in 2020. It has gone down to roughly 59% in June 2023. A very similar pattern we have seen in almost all the three small cap companies. But more importantly, FIIs have taken strong positions from roughly 8%. They have gone to 9.97%. From a DI's perspective, roughly 10.34% have gone up to 13.57%. It's a good signal that FIIs and DIs are showing a lot of confidence in this company. From a public perspective, 12.92, and it has again gone up. Public is seeming to be stacking up on this stock, has gone up to 16.52%. If you go back and have a look at their balance sheet as well, from a reserves and borrowings perspective, borrowings are only 106 crores, while the reserve seems to be quite high, which is again good from a small cap company perspective. From fundamentals perspective, this company is a gem. It has produced some results that no other company or very little company or very less companies have done. If we go back and have a look at their PE ratio track record as well, so let us go ahead and look at their PE ratio in the last 5 years. Their median PE ratio has been at around 70, but right now, because of extremely high EPS, which is around 18, the company's PE is at 60. So from its own comparison perspective, the company is trading at a lower PE than the median PE. Might be a good time for people to consider taking some positions in this company. Not a recommendation from my perspective, but overall, FL India seems to be a company that is a future looking company, and as soon as the stock hits the bottom prices, maybe there is a chance for us to consider investing in this company. You now might have a natural question that, Rahul, there are a lot of good AI companies such as Tata Elxsi, Happiest Minds, SimSystem Limited, and other companies. Why have you not talked about those companies in this video? My answer is very simple. It is already a very long video. I can't cover possibly all the companies in here, but if you would like me to create part 2 of this video, let me know in the comments, part 2, and also let me know the stocks, the AI stocks that you would like me to analyze, and I will be happy. If I get more than 500 comments in this video, I'll be happy to create part 2 or even part 3. It all depends on your love, your support, and your comments that you're going to drop. With that, I will see you in my next video. Keep rocking.